Welcome to Taking Stock. I'm Amanda Lang. Coming up, a look at trade in Canada, including the confidence level of business, our relationships with key trading partners, and the dirty secret in Canada that internal trade is still far from free. That's all ahead. First, Canada's trading relationships are vital to our economic well-being. Here's what you need to know. Trade matters. It drives 2/3 of Canada's GDP, with 1 in 6 jobs linked to exports. Economists estimate that incomes are 15 to 40% higher than they would otherwise be thanks to trade. Canada has 15 free trade agreements that cover 51 countries, representing 1.5 billion consumers. Our relationship with the U.S. is, of course, the most important. The Canada-U.S.-Mexico agreement, which replaced NAFTA, was worth $1.8 trillion in 2022. In 2022, Canadian exports in goods and services rose 21.2% to $940.4 billion, driven by price increases, especially in commodities. Meanwhile, goods and services imports also rose 20.5% to $936.2 billion. 2022 wasn't as good for foreign investment. With new incentives for investment in the U.S., Canada saw foreign investment contract 21.5%, and Canadian investment abroad also fell by 15.8%, though both were above the long-term pre-pandemic average. Exporters in Canada are feeling good these days. Export Development Canada reports confidence is up 5 points to 70.1, though that is still below the historical average of 72.7. One big reason could be uncertainty about the U.S. trade deal. It's up for review in 2 years' time, and a Trump presidency could spell trouble. He's promised tariffs on imports of 10%. Given how much is at stake, maintaining confidence in our trade deals and in our partners is obviously important. And are we feeling confident? Ross Prusakowski is Deputy Chief Economist at Export Development Canada. Thanks for being with us.
Thanks for having me.
And of course, at EDC, you keep tabs on how people are feeling, exporters. The numbers, I would say, are pretty good, Ross, but below historical average. So what do we make of that?
I think what we're making out of it is that businesses are feeling more confident after the last couple of years of COVID disruption, but we're still not all the way back to where we were pre-COVID. And I think interest rates and the uncertainty around the global environment, and especially some of the trade disruptions, with 90% of exporters flagging that that is a key issue for them, that is what's keeping confidence from getting back above historical levels.
And of course, we just recently saw tariffs increase by U.S. President Biden on Chinese goods. It'll be phased in over time, but it is an era where tariffs are alive and well in the world, even among trading partners, Ross. So what do you think that does to confidence for exporting businesses?
I think it's just a continuation of what we've seen since the pandemic, where we had supply chain shocks, where we had tariffs coming from even before the pandemic with the Trump administration. This is just another iteration of it. I think what it means for businesses is that, the era where you could have a supply chain and not have to mind it too much, that's ended. So now companies have to be more mindful of global developments and also pay attention to how the geopolitics are evolving, and they might get caught if they're not.
Because we know that, on the geopolitical front, free trade is less, I don't want to say it's less in vogue, but it certainly seems to have less support around the world, even among former allies than we have seen, former trading allies, I should say. And I put the U.S. on that list, right? We had to renegotiate our biggest trade deal. It's up for another review in 2 years. It just feels a little bit less like a given. Does that, from where you sit, has that changed the tone for businesses that are considering trying to do trade in another country?
I don't think so at all. I think it's something to be mindful of, and I think it's for companies to pay attention to. But the benefits of international trade are pretty extensive. Mm-hmm. It provides diversification, and especially given the slow growth environment that we have in Canada and a little bit in North America, given high interest rates, given our slow growth in Canada because we are so indebted, it provides an avenue for businesses to continue to grow revenue, to grow employment, and to challenge other competitors and make sure that they're not getting boxed out by international competitors themselves. So though it's an extra layer of challenge, I think it's actually one that companies can deal with, and if they manage it correctly, can really help supercharge their businesses.
And to your point, the economy benefits from more open trading, from businesses that are looking at the globe as their competition. So therefore, I guess it stands to reason that we should look at policies that are supportive of trade. Do we have the right mix in place? Could we do better in this country of supporting businesses that do want to trade?
I think there's always opportunities for improvement, especially given we have a diverse country with a lot of different governments and a very large country geographically. So there's always opportunities to improve infrastructure, to improve coordination between levels of government. But I'd say that broadly what we've seen in Canada is a pretty supportive policy mix. We have CTPPP with the Indo-Pacific, which is supportive of trade. We have CETA. You mentioned the renegotiation of the Canada-US-Mexico agreement. All of these put pretty significant platforms in place for Canadian companies. I think now it's just enabling them to use them more and for companies to start looking outside our borders a bit more.
The old saw is that Canada's a trading nation, but not necessarily a nation of traders. How are we doing on a cultural front? Are we thinking entrepreneurially? Are we thinking like traders?
Yeah, so in our trade confidence index, you can see that roughly 20% of companies are already doing business internationally and looking to expand their investments. And you've got another about 20% of companies that are looking to actually start exporting even more. So I think there is always this Canadian trope that we're conservative, we're a little bit reticent to go out into global markets. But what we're seeing is that companies see that as a key source of growth, especially given the current domestic environment. So that's a space that we actually expect that we'll see as we go forward, more demand. And in our end of year survey, we're expecting probably even more interest in exporting.
Ross, it's so good to have you for this. Appreciate your time.
Thank you very much for having me.
Ross Prusakowski is Deputy Chief Economist at Export Development Canada. Still ahead, Canada's good standing in the world is important when it comes to our trade relationship. So are we losing influence? Stay with us.